Okay, hi guys. I just wanted to do a real quick one. I don't really like to get into technicals, but I know most people get involved with trading, starting with the technical side, and then now you try to get more strategic. Well, that's what happened to me anyway. So I wanted to show you something I've been watching real quick. As you know, I haven't been very active. Why? Because I'm kind of saving my capital for when volatility starts to rise. And I wanted to show you what's going on here just a little bit. Um, as you can see, here's the SPY, and I just painted. I mean, I did a cut and paste, and I just kind of zoomed in on this portion of the chart, just so I could show it to you folks easier. This is the SPY. It's today's date, 9/3, and IV rank, as you can see, is 22%. That's pretty high. IV rank doesn't usually get this high, and it hasn't. I think it's only been this high maybe like 5 to 7 times all year. But I wanted to show you something that I saw very interesting. This is back in July, mid-July. See, July 15th. This is July 21st. So right around here, I want you to notice something. Here's IV rank in July, kind of spiked above 20. See, this red line is 20. This green line is 50%. So we're kind of right around here. All right. Now here's OBV cross, or odd balance cross. This is just a study I created where when the line is green, there are more buyers than sellers. When the line turns red, there are more sellers than buyers. And usually when it crosses below its average, it continues to go further down. It's a bearish sign. And this is slow stochastic, and this is 39.1 setting. So usually, basically, when it's green, it's a positive sign. When it's red, it's a negative sign. And the very bullish signals are when you see the OBV go red, like here, and it's also crossing red over here, and it goes below this 50% line. It's a really bearish signal. And as you can see right here, that's exactly what happened, right? You could short it, and it went all the way down. Opposite is when they both turn green at the same time. As you can see, the slow stochastic started to turn green right here, and it was green right here, and it's a bearish signal. And it dipped on red a little bit, but this stayed green, and sure enough, right on this day, as you can see, it kept on going. And all this little green arrow means is where my 13-day moving average crossed above the 21-day moving average. And mine gives me a little up arrow here. This yellow arrow is when the 1321 crossed below the 21-day, and it's a little yellow arrow. It's usually a bear signal. So I kind of use these three things just to give me a thing. Now notice in July right here, see these two white lines are Bollinger Bands, 2 standard deviation on the top and bottom. But you see how they're narrow here? Okay? So look at this. That little red, like false red and up, right? It's a false red down, and then it just stayed above, 80 right here. And then it continued to kind of go up a little bit right here. And IV rank kind of carried up, and then there was a drop, but it was a false. Okay? All I'm getting at is, I think personally I'm getting ready to put on more strangles because the difference between this time period and this time period is, look. See how it's crossing, getting ready to cross above. It is above 22. It's above 20, so technically it's a little off. But I see a little spike happening here. Okay. See how this is red, just like over here was red, and see how this stayed above 80, and see how high and steady this is above 80. So to me, this could be like a fake out, to the downside, and it comes back up. But the reason why I figure there'll be volatility, but I think what will happen is this Bollinger Band will kind of, because it's already wide, I have a funny feeling that it's going to stay wide and contract. Okay? When that contracts, when these two lines get closer together, usually IV or volatility falls like this. Okay? See how IV rank is low down here? Look how narrow it is, right? And then it kind of spiked. And then see how IV rank rose here and it's expanded here? Great. It expands out like this, meaning that the vol move is bigger, okay, and the price move is bigger. So I'm getting ready to because usually you don't see it like right around late. I mean, it's just been a bullish market, right? So IV rank has kind of been hovering 20 is pretty high. So I'm going to flash back. So remember this. Now I'm going to go back to the live chart, which is right here. Okay. So, and I'm going to zoom out. This is a 1-year chart, okay? This is your IV rank right here. Look how many times it got above 20. You know, usually right around 20, it just kind of stays or drops, right? Occasionally you have the spike up like this, okay? But that was usually when you see a major move like this and like this, all right? So wait, should I auto range this? Okay, it is auto range. So I'm being very careful and I'm watching because I'm looking for some action. Basically, I'm looking for action, all right? But look how it hovers. See how it just hovers around this 20-day line? Usually drops. Occasionally it'll spike, okay? It'll spike up, but it never got to 50 even. It dropped down, right? Spike, drop down, and keeps on going down. All right, so the only big spike, I think there were 2 big spikes above 50. It only hit 50 once, twice, 3 times, 4 times. And it touched it, right? Touched 5, 6, 7, 8 times. 9 times all year. So almost like once a month, it'll touch 50, right? It averages once a month, it'll touch 50. Well, what is this? September, yeah, 9 times touch 50 in a rolling 12-month period. So we're not quite into a year yet, but almost, right? So, but look how many times it touched 20 and got down. So anyway, all I'm saying is, what I'm looking for is I'm looking for a little spike in volatility, right? Oh, I forgot to show you this. Every time it hit past 50, look how narrow it was, and then it expanded. See? Every time it got up to 50, it narrowed down and then expanded. Here's a big one right here. See how narrow it was, the Bollinger Band, and it expanded, right? Here's another 50, right? It kind of narrowed. Well, didn't spike up, so I guess it didn't expand, right? Look, same thing. Well, kind of went narrow here, right? Look at this. Expanded, contracted, right? Where's the spike? Look for a spike in IV here, right here. But it didn't expand. See how it expanded big like this? That's when IV rank got. So what I'm saying is, this has a better chance of contracting than expanding. Okay? As you notice, every time it contracts, like see how it was fat over here and it got skinny? Look what happened to IV rank. It dropped, right? So I'm looking for a little spike a little bit, but I'm looking for IV rank to drop, and I want to collect premium when that happens. And look, I'm still going to try to collect far out, so I don't have to worry about price, but I'm gonna hopefully collect on the vol crush. All right, so as you can see in Dole, right here, here's SPY, here's the IV rank, right? Here's the current positions I have on, right? I'm short this call right here, I'm short this put right here, I'm short this put right here. This is my and I can move it over a little bit here. And these are my, my wings that I bought to cover my ass, so to speak, right? Okay, but as you notice, look, the standard deviation line changed as a stock move, right? Here's 1 standard deviation, and here's 2 standard deviation. Now, if I click on choose strategy, and I go to my golden gecko settings, right? Here we go, 84, 8 wings wide, the SPY, and I click go. See? I'll zoom. Well, I don't have to zoom out. This is pretty much perfectly wide. I can click that out to maybe here, whatever. Just bring it in 1 strike, meaning just, nope, leave it there. Look, I can collect 77 cents. My pop is 73%. I'll click this for my percentages. Nice, right? Okay, and because I'm predicting a vol crush and the Bollinger Band's contracting, I'm hoping that the price will kind of stay, the stock market will hover or fluctuate, at least stay in between these 2 ranges pretty much. All right. Let me double check how much I can collect on the call side. I'm gonna collect only 10 cents. I'm only gonna collect like 8 cents total, right? Because 0.105 I'm gonna collect, but I gotta buy this, so I'm only gonna collect 8 cents. It costs me that's $8. It costs me $6, $3 a side. Okay, so I don't really gain much by collecting this call side. Excuse me. So I could take a chance, and I already you know what, I see this white dot right here. I already have a position on here. Okay, so if I want to be a little bit more aggressive, and I think we're more towards the downside, or we're not, I could go do something like that. That's a 2. But see how wide it is? See how wide the strikes are? 205 to 210. Okay. So it gets, am I on weekly? No, this is normal, right? Standard options, yeah. So 44 days away. This is kind of perfect to collect. I could put another position on, you know, right here. And see my other call side I have is this call. I sold this call right here, the 210, and I purchased the 225. That's what these white flags are. If I put on another position, it'll be the same call which I already have, and this I'm only going to collect 8 cents. So the most I can make is it cost me $6. It cost me 6 cents, $3 to do. I'm sorry, because it's $1.50 a side, so it's $3 to do. I'm only going to collect $8, so I'm only going to make $5 on this side per contract. But it's more of a mechanical thing, you know. So I'm looking at possibly putting on a trade like this tomorrow. But I kind of just wanted to give you an insight into what I look at and kind of the things I look at if you're looking to trade. And some people use technicals or not, but that's just kind of what I look at. I already posted the scan here, so here's my high IV rank ETFs. It's after hours, so the bid and ask are not correct, 35 to 50%. So I'm going to look at collecting some of these trades tomorrow, or if you're reading this on Thursday morning. All right, hope this helps. Thanks a lot.